Okay, we are up to our next topic. What in the world is going on with the real estate situation in the United States right now?
So something that we've talked about
Okay.
quite a bit is of course, the economy right now and everything going on from unemployment rates to, stock market instabilities to housing prices in the U.S. right now. So I think one of the most
Mm,
troubling
okay.
economic indicators that we're seeing right now is the housing market. And everybody knows about the housing market collapse in 2008. And so people are worried, are we, going to be facing
Hmm.
something similar to that right now? And it looks like based on statistical evidence and trend lines that we are going to be heading into another housing market collapse in the US. You always have the point of the spear, basically the first precursors to it. And you're seeing that sort of happening right now in Florida and Texas. Now, those were two of the states that were most benefited by the pandemic, and the basically migration of Americans during that time. Yeah, so
Work from
you
home.
saw housing
Work
prices
from
in
home
Texas
movement to
and Florida skyrocketing. And right now, because of that, I think you're seeing them being the first ones to be impacted by it. So, this graph we were going to look at is basically showing
the graph.
the
Okay.
largest
Here we
housing
go.
median prices for houses decline in the United States. And not to get into this too far specifically, but I just thought it was interesting. If you look at the states, that how many of them are in Florida, which are experiencing the largest housing price decreases. You also see Texas in there and Louisiana, which Louisiana was a little bit surprised about, but I still think they were probably caught up in that trend during the pandemic of people moving to more rural places, getting away from big cities, things like that. So, anyways,
Right.
if that's probably enough with the. So I think
Okay.
you can see that it is going to be impacting Florida, which the condo is even, condo sales are even worse right now. But you do have several economic indicators that are showing, I think, the direction that we're going and allow us to sort of predict what direction the housing market's going to go. One of those is inventory. It's like anything else, it's supply and demand. Now, during the pandemic, you had a huge demand and the supply wasn't abnormally high. It was just normal. So that demand, of course, created, what maybe is the bubble that we're going to see burst. Housing prices not only being listed higher, but you're
Mm,
seeing people pay 60, 80, even $100,000 above asking price at that time. You saw bidding wars. So you had people getting into homes that were maybe already overvalued for what they were worth because of the demand, but then people paying another 100,000 above asking price. So now you're starting off with a home that you paid much more than the value of it. So to see a drop in value start to come in, now you're really in trouble if you bought that house, 3 or 4 years ago during the peak of the housing market. Texas is another state we talked about. And if you don't know, my brother Parris actually lives in Texas. So he's got a little first. Yes, in Austin, which has
in
actually
Austin.
been the biggest impacted city, major.
I saw Austin on that graph that you had me bring
Yeah.
up. Number seven, worst. If you're looking to buy a house, best. But
Well,
if
let's
you
take a
live in
look
a
at that
house and want
graph
to
then and
sell it,
see what
worst.
we're looking at here. The other one.
That same
So
one or
this is
the other
showing
one?
four of the biggest,
Okay.
basically cities, but biggest housing markets in Texas. And so the first two lines, which are pretty much invisible, are home sales and pending. The big line is the current,
Oh. Mm.
what do you call, supply, basically, of homes. So you're seeing the inventory in red and
Right.
how much higher that is year over year from the previous year. And then the gray are new listings coming on the market. So if you compare those lines to the sales and pending sales, you can see we're not looking at depleting that inventory anytime soon. And you actually have those new listings, which are going to be jumped on
Right.
top of the current listings, for next month. So you can definitely see where this trend is the exact
Yep.
reverse of what we were seeing during the pandemic. When you had the demand and sales outpacing the inventory, now you see the inventory the highest it's been since pre-pandemic levels at this point, which means, like you said, possibly a great opportunity for home buyers, but definitely a tough time for home sellers. So why don't you talk a little bit, since you do own a home, what your personal experience has been with the value of
Hmm.
your home and what you've seen in the last couple of years. And maybe tell us when you bought your home, how long ago.
Right. Well,
Okay.
yeah, about 20 years ago, I bought the house during
On
the
the
last
peak of it
housing
or the
bubble.
drop of it?
Actually, in the middle, because it was crazy. The only reason we were able to afford it is they gave us a mortgage that was interest only, which meant we didn't pay anything on the principal. And it was a 5-year balloon, which meant we got this great affordable deal for 5 years where we only had to pay the interest. But at the fifth year, the whole total amount for the
Oh,
house became due. So fortunately, I mean, and this is what they counted on, if you're in a better situation, then you
wow.
refinance it. So we were
That's
able to
placing a big
refinance,
bet.
and that was good. But man,
Now, what percent did you
yes,
have to put down at that time?
they
Wow, that was a great time to buy
5%.
a house if you could genuinely afford
Wow.
it. Now it was a great time to buy a house if you couldn't afford it, but those are all the
Yeah.
people who lost out at the 5 year mark, you know. So
Yes. Yeah. So this house was a typical middle class house. Got it for $169,000, and the highest value it got to, which would be about 3 years ago, when the like you mentioned, the pandemic boom was happening. It got up to almost six hundred and
wow.
fifty thousand dollars in value.
And this isn't a
That was
McMansion or
something.
anything,
Yes. Isn't
especially
worth.
just a regular home on a regular
No,
residential street.
no, no. It's a little ranch house in a regular middle class neighborhood. Well, I was middle class neighborhood. The problem now is people with kids can't afford to move here
Um,
because the prices. So it's become more of a upper middle class, and we don't see many people with kids anymore. It's
interesting.
all people with dogs. The population is changing, but it's not worth 650,000 anymore. The value of it now, it's down to right about
Wow.
500,000. So it's dropped from 650,000 over 2.5 years, about dropped to 500,000, which is still pretty good considering we bought it for 169. But it feels like we lost
Yeah, which is scary. But now
$150,000.
imagine if you had bought it for 650,000 a couple of years ago and how you would feel right now. So why are all these people selling in the
Mm-hmm.
worst market? You know, and when they're going to lose money? That's kind of a big question too. And I think you've experienced some of this too, because a lot of people aren't really selling by choice like your neighbors. They're selling because they've been priced out of their home. They
Right.
had a fixed mortgage, you know, thinking that their mortgage would never change. And so they were going to be paying the same amount for 30 years and they knew they could afford this amount. But that doesn't include the escrow, which can change even in a fixed mortgage. And that includes, which you know, insurance, you know, HOA fees, things like that. You're seeing HOA fees just seem like they're skyrocketing these days for one reason or another. So you get all three of those factors: insurance, taxes, and HOA fees. And people can't afford to live in their own home that they thought they bought. And now you own a home. You feel like you have some security. And all of a sudden, they find they can't afford to live in their own home that they own technically and are forced to sell.
Empty
That is another
homes.
issue, is that foreclosures are also at all-time highs since pre-pandemic, maybe even since 2008 right now.
Mm.
So you've got the double negative of that, that of course people are losing their homes and the banks are getting those back, but that is also adding to the inventory of homes on the market, you know? So it's going to increase it even more. Now,
Yeah.
do you know what happens if you owe more on the home than it's worth? Will the bank still foreclose and basically they have to take the loss at that point? Or do you still owe them?
Well, if you stop paying, they have no choice but to take the home back from you. But you mean, what if you owed an extra
Yeah, yes.
200,000 on
Do they
top of
have
what
to
they
just
can
call it
sell it
even
for?
or do they still come after you for the difference?
You'd have to declare bankruptcy, I think, to discharge that debt, where they would, I mean, otherwise, if you just like walk away, they're going to come to you for the money. They will take the house, they will foreclose on it, they will resell it. But I think unless you've declared bankruptcy, I don't know, I can't offer financial advice, but I think unless you go through that legal process, they say, hey, the house was only worth this much. You still owe us
Yeah,
200,000.
and I
So
have heard of
keep
people
paying.
who've had to sell their homes, take out a personal loan to pay off the mortgage, the 50,000 that they owed beyond what they were able
Ah,
to sell the house for, which was less than their mortgage. So, and they've already put a down payment,
right.
so they're losing that plus the 50,000, having to get a personal loan to pay off the mortgage. Now they don't have a home. They've still got a $50,000, or $100,000 personal loan, which has a much higher, maybe even 13, 14% interest rate. So
Yes.
being,
Right.
being a homeowner is great. And I do think there was a time when that was the surest way to financial independence and wealth creation, was in owning a home. But I just wonder if that's
Hmm.
maybe not the case anymore. Yeah, for a lot of people, it was the surest path to financial destruction.
Yeah, it could have easily been for my family because we had no business buying a home back when we bought
Oh,
this house. We were not financially set for that. And it was only through those giveaways practically that they were doing that we ended up getting a house. But for going forward, I think the market's always up and down and up and down over time. I'm still convinced, at least I tell myself this, to not feel so bad when I think about how we lost
uh,
$150,000 not selling the house 2 years ago. I think Austin has still got all the elements to draw people in, and there's only so much space. The city's all been built out, unless you want to go way out to the suburbs and deal with that commute. I still think the value of this home will someday get
oh,
up to like
sure.
$750,000 because I saw it happen in Seattle. It happened in Seattle. Little houses that people bought for $150,000, they're now what,
Yeah.
over $1 million.
Our old
Basically, any
family
house
home, remember we had
inside
looked at
Seattle is
that, the
over a
one
million.
that we grew up in Ballard in Seattle, and I think Dad
Oh yeah,
paid 89,000, something like that for it, right around 90, and then we ended up selling it for
yeah,
190
right.
something. I remember it was just under the $200,000 point, and at that time it was just past a peak. And I remember them telling Mom, if you had sold it a year ago, you would have got over 200,000, but now you can only get this much. But still, it was more than doubled what he had paid for it, so it still seemed like it was good. But I think we had looked recently, and the last time
Yeah.
that exact same house had sold, it was $1.2 million. And then you think, man, if we had just held on to that house, you could have really left us something, Dad. But I think you're right. In the long term, that's always the key. If you can hang on to it, how desperate are you? So I think you're fine. And the fact that you have so much equity in your home, multiples of what you paid for it, even with it lowering, you're still up.
Mhm.
So that's good. But it's nice it worked out for you at that time. So you've kind of gone through two bubbles now. You got the advantage of the first and then saw that happen, and now
Yeah.
riding out the second ones.
Yeah. Well, we were lucky, so
All
I
right.
feel very fortunate we were.